All right, let's get into some of the technicals now in terms of the market action. Tony Sycamore from IG joining me on set. Tony, 6-day winning streak snapped overnight. We're still digesting the US credit downgrade. What are the technicals of the NASDAQ in particular telling you?
The NASDAQ's had an extremely strong run up from those April lows. And it looks to be an impulsive wave 3. So we had the decline from the February high down into that April 7th low. Appears to be a correction, and then we've obviously rebounded quite strongly. I suspect what we see now, or what I am looking for, I should say, is a pullback. So a pullback in an Elliott wave sense, a correction for a wave 4, which brings it back down to around 20,500, just ahead of that 200-day moving average. Now, I suspect buyers will be lining up ahead of that 200-day moving average, so it may not get there. But ultimately, I do think we have still the AI theme has re-emerged and come back bigger and stronger than ever. So I like the idea that if we do get a pullback, you look to reload longs in the NASDAQ.
Wow, that's a long sentence. Don't say that 3 times fast. All right, our market, I mean, you've got the banks, CBA, still at these records, Wesfarmers, Coles, Telstra, all the gold stocks looking good as well. So what sort of momentum do we see here in terms of reaching those records again?
And the defensive low beta nature of this stock market is also coming to the forefront as well over the past month or so. And look, I still suspect that we don't have the backdrop in place to push to new highs. It has had an amazing run higher, but I think it needs to do some work just to correct that recovery. We are seeing the RSI push up into overbought territory. For me, we're now about 50 days away from the expiry of the reciprocal tariffs, which is July the 9th. I'm still looking for some rotation sideways, broadly about 200 points either side of the 200-day moving average there. So that's what I'm looking for. Now, whether it plays out like that, I'm unsure at this point of time, but I would be looking to see some sideways price action in the month ahead.
All right, well, what about the Aussie? Because it did have a dip yesterday after the RBA's, what she called a confident cut. But if you look at some of the price action, that was more to do with what was happening with the US dollar on the Moody's downgrade.
Yeah, look, the Aussie for me, a wonderful V-shaped bottom down there, but it hasn't been able to confirm that a bottom is in place, which is still the break above the 200-day moving average. It's had a couple of looks up at the 200-day moving average. Even yesterday, it was knocking on the door of that 200-day moving average again yesterday, but failed to get through. So at this point of time, we are seeing a corrective piece of price action here in the Aussie dollar. I don't think there's anything sinister in terms of a retest of the lows at this point of time, but if we are looking for the Aussie uptrend to really re-establish itself, we need to get above the 200-day moving average and then above the 65 to 65.20 resistance area. And I think that gives the Aussie the green light to push up towards 67.50.
Now, we're not discussing in particular detail in terms of the technicals oil, but I just want to make this point more broadly about commodities. There is this CNN report, US intelligence suggesting Israel is preparing for a potential strike on Iranian nuclear facilities, seeing oil surge this morning. And again, the flow then into the safe haven gold price. Yeah,
look, it's not the first time that we've heard reports that Israel's contemplating bombing the nuclear facilities in Iran. And if there is ever a time, it's when Iran's proxies have been weakened. So we've obviously got the Houthis in Yemen, we've got Hezbollah, Hamas, and in Syria as well. All of those proxies now are not providing a buffer for Iran. So if you're looking from the Israeli point of view, this is probably the right time to start thinking about this. Obviously, we hope that diplomacy continues to prevail and that we don't get to that point, but I can understand why they potentially are contemplating. Now, what does it mean for crude oil? Well, crude oil is still in a range, $55 to $65, spiked higher, then came off earlier this morning. For gold, I really like the price action in gold. We chatted about it last week. The retracement from the 3,500 high has been very corrective in terms of the price action there down to that 31.20 low. Last Friday, put out a bullish recommendation on gold, looking for a retest of that 3,500 high, and I stand by that call. I still think gold has further upside from here.
Right, and what about the digital gold?
Digital gold, well, that's been one we've chatted about many times. And Jules, I just, I like what I'm seeing there. I can't sort of state it enough. It's basically going to, it's having a look at the record highs there. And I think that once it gets through that 110,000 level, then it's probably the green light for the next leg higher. I was doing some maths on what MicroStrategy own this morning in terms of total Bitcoin supply, they're up to around 3%. So, they're continuing to buy. Every dip is being well supported by your MicroStrategy's and I guess the clones that are starting to emerge. And that's why the dip in Bitcoin has been fairly shallow at this point of time. And I guess we're going to just wait now for that final catalyst to see Bitcoin push above that 110,000 high.